What's happening, crypto fanatics? Get ready, because the news cycle is absolutely exploding today, and we've got the must-know updates that are shaking up the entire digital asset universe. You are not going to want to miss this. We're diving deep into seismic shifts that are redefining the game. From institutional giants making massive plays to groundbreaking strategies emerging, the pace of innovation is relentless, and if you're not plugged in, you're missing out on the future. We're talking about moves that could change everything, so buckle up, stay sharp, and let's get straight into the action. First up, are Ethereum ETFs actually outperforming Bitcoin? We're breaking down the numbers and what this means for the future of institutional adoption and where the big money is flowing. Then, hold on to your hats, because a major healthcare company is planning an absolutely colossal Bitcoin buying spree that could redefine corporate treasuries. Next, we're dissecting a revolutionary hybrid Bitcoin strategy that's creating a dual-driven edge in this rapidly evolving landscape. And finally, we're exploring the increasing scarcity and the massive investment potential that comes with owning full Bitcoin. You need to hear this. Stick around, hit that like button, subscribe, and ring that notification bell so you never miss a beat on Bitcoin Bulletin. Ethereum ETFs surge ahead, a paradigm shift in institutional investment. Get ready for a seismic shift in the world of digital assets, as the latest data reveals Ethereum ETFs are not just competing, but actively outpacing their Bitcoin counterparts in a stunning display of institutional adoption and capital reallocation. This isn't just a minor fluctuation. It's a potential signal of a new era where the smart money is diversifying its digital asset strategy beyond the king of cryptocurrencies. We're seeing a significant influx of capital into Ethereum-based exchange-traded funds, suggesting a growing confidence in its long-term potential and utility. This surge in demand is prompting a serious reevaluation of how institutional investors are approaching the crypto market, moving beyond a singular focus on Bitcoin to embrace a more nuanced and diversified portfolio. The implications are profound, potentially leading to a significant reallocation of capital across the digital asset spectrum. As more traditional financial players enter the space, the efficiency and accessibility offered by ETFs are proving to be a major draw, making it easier than ever for large institutions to gain exposure to these burgeoning markets. This trend could very well dictate the future flow of institutional money, influencing the growth and development of the entire crypto ecosystem for years to come. This is just the tip of the iceberg. Prepare yourself, because the next story is about a healthcare giant making an unprecedented move into Bitcoin. Healthcare giant eyes $5 billion Bitcoin acquisition spree. In a move that's sending shockwaves through both the financial and healthcare sectors, a prominent Utah-based healthcare company has unveiled plans for one of the most ambitious corporate Bitcoin acquisition strategies ever conceived. This company, known on the Nasdaq as NAKA, is preparing to raise a staggering $5 billion through stock sales, with the explicit intention of significantly expanding its Bitcoin holdings. The company has initiated an at-the-market stock offering, a financial maneuver allowing it to sell shares at prevailing market prices whenever opportune, thereby fueling its aggressive Bitcoin accumulation strategy. This bold initiative is a direct result of a transformative merger in August 2025 with Nakamoto Holdings, a firm spearheaded by David Bailey, a notable cryptocurrency advisor to former President Trump. Bailey now leads the combined entity, aiming to establish what they term an institutional-grade Bitcoin treasury vehicle. Following the merger, which secured $710 million in funding, Kindly MD, as the company is now known, wasted no time. In August alone, they acquired 5,744 Bitcoin for approximately $679 million, bringing their total holdings to 5,765 Bitcoin and catapulting them into the top 20 corporate Bitcoin holders globally. While their average purchase price of $118,205 per Bitcoin means they are currently sitting on an unrealized loss given current market prices, the company's leadership views this as a strategic long-term investment. If they successfully raise the full $5 billion, they could acquire an additional 45,000 Bitcoin, potentially controlling over 50,000 Bitcoin and mirroring the pioneering strategy of MicroStrategy, the largest corporate Bitcoin holder. This ambition aligns with a broader trend of public companies holding over 951,000 Bitcoin, further legitimized by proposals like the Bitcoin Act of 2025. Despite a recent dip in stock price following the announcement, NAKA shares have seen remarkable growth, underscoring the market's reaction to this bold pivot. However, concerns linger regarding the company's core healthcare business performance, which has experienced revenue declines and widening net losses. The company's audacious goal of eventually holding 1 million Bitcoin, nearly 5% of the total supply, positions it as a potential leader in a new wave of corporate digital asset treasury management, though the inherent volatility of Bitcoin presents a significant risk. But the innovation doesn't stop there. We're about to uncover a unique strategy that's giving one company a serious edge in the Bitcoin market. MARA's hybrid Bitcoin strategy, pioneering a dual-driven edge. In the dynamic and often unpredictable world of cryptocurrency, staying ahead requires more than just following trends. It demands innovative strategies that create a distinct advantage. Marathon Digital Holdings, MARA, is proving to be a masterclass in this, implementing a sophisticated hybrid Bitcoin strategy designed to capture value from multiple fronts within the evolving crypto landscape. This approach cleverly balances the direct ownership and appreciation of Bitcoin with strategic operational efficiencies that enhance their mining capabilities and overall profitability. At its core, MARA's strategy involves not only accumulating and holding Bitcoin as a primary treasury asset, akin to many of its peers, but also optimizing its mining operations to be as cost-effective and energy-efficient as possible. This dual focus allows them to benefit from Bitcoin's potential price appreciation while simultaneously strengthening their core business operations. By leveraging advanced technology and smart energy solutions, MARA aims to reduce its cost per Bitcoin mined, thereby increasing its profit margins and bolstering its reserves. This is particularly crucial in a market where operational costs can significantly impact a miner's ability to thrive. The company's commitment to innovation is evident in its continuous efforts to upgrade its mining fleet, adopt more sustainable energy sources, and explore new efficiencies in its data center operations. This proactive stance not only minimizes environmental impact, but also provides a competitive edge by lowering operational expenditures. Furthermore, MARA's strategy includes a forward-looking perspective on the broader digital asset ecosystem, looking for opportunities to diversify revenue streams and strengthen its market position. This could involve strategic partnerships, investments in related technologies, or even exploring different blockchain protocols. The company understands that the crypto market is not static. It's a constantly evolving ecosystem where adaptability and foresight are key to sustained success. By combining a robust Bitcoin treasury with best-in-class mining operations, MARA is positioning itself as a resilient and forward-thinking player, capable of navigating market volatility and capitalizing on future opportunities. This hybrid model offers a compelling narrative for investors seeking exposure to the Bitcoin market through a company that demonstrates both strategic foresight and operational excellence. It's a testament to how a well-executed, multifaceted approach can create a powerful dual-driven edge in the competitive cryptocurrency arena. Speaking of value and scarcity, our next story dives into the fundamental forces driving Bitcoin's investment potential to new heights. The unfolding narrative of Bitcoin's scarcity and ownership value. As the digital revolution continues to reshape global finance, the fundamental principles of scarcity and ownership are gaining unprecedented traction, particularly within the context of Bitcoin. We're witnessing a growing narrative that highlights the finite nature of Bitcoin, with a hard cap of 21 million coins, and how this inherent scarcity is intrinsically linked to its increasing investment potential. This isn't just about holding a digital asset. It's about owning a piece of a system designed for scarcity, a stark contrast to the inflationary nature of traditional fiat currencies. The very design of Bitcoin, with its predetermined supply and having events that reduce the rate of new coin creation, builds a powerful case for its long-term value proposition. As more of the supply is mined and enters circulation, the remaining unmined Bitcoin becomes progressively scarcer, a factor that many believe will continue to drive up its price as demand grows. This increasing scarcity is not merely a theoretical concept. It's a tangible force influencing how individuals, institutions, and even nations are approaching Bitcoin ownership. The desire to secure a portion of this limited supply is fueling a significant portion of the current market interest. Ownership of Bitcoin represents more than just an investment. For many, it signifies a stake in a decentralized, censorship-resistant financial system that operates independently of traditional intermediaries. This appeal is amplified by the growing recognition of Bitcoin as a potential store of value, often dubbed digital gold, especially in times of economic uncertainty or inflation. Analysts and investors are increasingly focusing on metrics that track the concentration of ownership, the velocity of Bitcoin transactions, and the amount of Bitcoin held by long-term investors, all of which contribute to the understanding of its supply dynamics and potential future value. The narrative of scarcity is becoming a cornerstone of Bitcoin's investment thesis, resonating with a broad audience seeking tangible ways to preserve and grow wealth in an increasingly complex financial world. As the global economic landscape continues to evolve, the fundamental scarcity of Bitcoin is poised to play an even more critical role in shaping its investment appeal and its place in the future of finance. And that brings us to the end of our Packed update. But don't go anywhere, we've got a lightning-fast recap and your next steps. Wow, what an episode! We saw Ethereum ETFs potentially leading the charge in institutional adoption, a healthcare giant planning a massive Bitcoin buying spree, a company rocking a unique hybrid Bitcoin strategy, and the undeniable power of Bitcoin's scarcity driving investment potential. That's a wrap for today's rapid-fire news. If you found this valuable, smash that like button, subscribe to Bitcoin Bulletin for more essential updates, and hit the notification bell so you're always in the loop. Don't forget to follow us on all social platforms to join the conversation and stay ahead of the curve. See you next time.